Mr. Rajesh Surana has a proprietorship firm in the name of THARUN'S in Jaipur. The firm registered under GST in the state of Rajasthan manufactures three taxable products M and O. Tax on N is payable under reverse charge, which means supply covered under RCM treated as exempted supply for ITC computation. The firm also provides taxable consultancy services. The firm has provided the following details for a tax period. So turnover of M excluding export sales 14 lakhs. M is a taxable product. So therefore for payment of GST, for availment of ITC like that, we need to prepare. So in the exam, we need to prepare a working note. We need to prepare a working note related to this. So what is that working note that we need to prepare? For payment of GST, first what is the activity that is given in the question? For payment of GST, what it is, and if it is taxable, we will write down. So what is that? That is liability. And for availment of ITC, that is for ITC computation. So particulars for payment of GST, and for ITC computation. Now, in that particulars, first transaction, so turnover of M 14 lakhs taxable. So therefore, on 14 lakhs, we need to pay GST. What is the rate of GST? So see here, assume the rate of GST on goods 12% and on services 18% respectively. So goods now. So therefore 12% into 12%, this is the GST I need to pay. So 14 lakhs into 12%, 1,68,000. Then for ITC computation, it will be taken as taxable. So how much? 14 lakhs will be taken as taxable. Because it is other than those 9 points. If it is taxable for payment of GST, even it is taxable for availment of ITC. Then number 2, turnover of N. N is covered under RCM. So therefore, we will not pay GST, but it will be treated as exempted for ITC computation. So what is that? 6 lakhs will be taken as exempted. Next, number 3, third transaction. Export turnover of O is taxable 10 lakhs. So on that we need to pay GST. So 10 lakhs into 12% equals to. So 10 lakhs into 12%, 1,20,000. We need to pay GST. For ITC computation, it will be treated as taxable. So 10 lakhs. Even for payment of GST taxable, ITC also taxable. Then next one, number 4, fourth transaction. So export of M with payment of IGST. Export of M upon payment of IGST is zero rated supply. In case of zero rated supply, exports and supply to SEZ are treated as zero rated supplies. In case of zero rated supplies here, so we can take the ITC. So for ITC computation, it will be treated like taxable. So export of M. So one second, export of M. So how much is the value? Export of M 2,50,000. Export of M, it is 2,50,000. So here that number is missing. So 2,50,000 is export of M. So export of M 2,50,000 on which we pay GST. So 2,50,000 into 12%. So 2,50,000 into 12%, that will be 30,000. So now 30,000 rupees, even for ITC purpose, it will be treated as taxable. We can avail ITC. We need to pay GST. Export upon payment of GST. Then export of O under letter of undertaking without payment of GST, under bond or annuity without payment of GST. So no need to pay GST, but for ITC computation, it will be treated as taxable. Then next one. So consultancy services provided to unrelated clients located in foreign countries. In all cases, the consideration has been received in convertible foreign exchange. Export of services. they have not given whether it is upon payment of IGST or without payment of IGST. So in the absence of information, don't take it as with payment of IGST. So take it as without payment of IGST only. So therefore 20 lakhs, in 20 lakhs no need to pay GST, export of services, but it will be treated as taxable for ITC computation. Then sale of building, no GST. In case of sale of building, there is no GST at all. But if for the purpose of ITC computation, it will be treated as exempted. But be careful. Excluding stamp duty of 2,50,000 being 2% of the value, entire consideration is received post issuance of completion certificate. Now, so stamp duty 2,50,000 being 2% of value. So what is the stamp duty value? For 2%, if it is 2,50,000, then 2,50,000 into 100 divided by 2. So that will be, so 1 crore 25 lakhs. So 1 crore 25 lakhs will be taken, understood, stamp duty value. So that is taxable or exempted, 1 crore 25 lakhs taken towards exempted value. Then point number 8. So the next one, interest received on investment in fixed deposits with bank. So interest on fixed deposits. So it is actually exempted for payment of GST. We don't have to pay GST, but it will be treated as taxable. This is other than bank, other than bank. Surana Industries, other than bank. So therefore, it will be treated as taxable for ITC computation, 4 lakhs. Then, so 9th point, that is sale of shares, purchase price 2 crore 40 lakhs and sold at 2 crore 50 lakhs. So in case of shares, no need to pay GST, but for the purpose of ITC, it will be treated as exempted. How much? 1% of sale value. 2 crore 50 lakhs into 1%. So 2,50,000 treated as exempted. 2,50,000. Then next transaction. So legal services over. So then for legal services received, that is legal services received. Inward supply. Legal services received from an advocate in relation to product M. Product M is what? Taxable. So on that legal service fully we can take the credit. Common inputs and input services. Input 35 lakhs, input services 15 lakhs. So on that 35 lakhs and 15 lakhs, we can definitely take the ITC, but it will undergo reversal. So exempted to total. Okay. So now with the help of other information, above information, we need to come. Now, first we will see what is the total turnover. What is the total turnover? So we need few numbers here. What is the exempted turnover? What is the total turnover? And how much is the GST liability that we need? First we will see total turnover. We will see total turnover. So that's the reason why the last column we have taken. So all these things we need to add. So 14 lakhs plus 6 lakhs plus 10 lakhs plus 2,50,000 plus 10 lakhs plus 20 lakhs plus 1 crore 25 lakhs plus 4 lakhs plus 2,50,000. So 1 crore 94 lakhs will be the total turnover. Now exempted turnover. What is the exempted turnover that needs to be taken? Now wherever we have kept as E, that should be taken as, so 6 lakhs. Then next one, 1 crore 25 lakhs plus 2,50,000. So 1 crore 33 lakh 50,000 will be exempted turnover. Now what is the gross liability? The gross liability, if you see, the gross liability is this 1,68,000, 1,68,000 plus 1,20,000 plus 30,000. So 3,18,000 will be the gross liability. 3,18,000 will be the gross liability. Now, ITC computation we will see. ITC computation we will see. How much is the ITC computation? First, ITC availed. How much is the ITC availed? That we need to understand. So ITC availed will be So legal services, if you see, so for that legal services, how much? So 3,50,000. On 3,50,000, rate of GST 18%. So 3,50,000 into 18%, 63,000. But this is exclusively used for M, so no need to do reversal. Then common inputs. What is that common inputs? The common inputs is 35 lakhs. On 35 lakhs, the rate of GST 12%. So 35 lakhs into 12%, 4,20,000. On common input services, it will be how much? So 15 lakhs into the rate of GST 18%. So 15 lakhs into 18%, 2,70,000. So now, how much is the total ITC availed? Total ITC availed 2,70,000 plus 4,20,000 plus 63,000. That will be 7,53,000. Out of this, minus ITC reversed. Which ITC we need to reverse? Only common ITC we need to reverse. That is 4,20,000 plus 2,70,000 into exempted by total. What is the exempted? The exempted will be, so just now we computed 1,335 divided by 1,940. 1,335 divided by 1,940, that will be the exempted. So 4,20,000 plus 2,70,000. Sir, what about this 63? No, 63 don't touch. 63 fully we can take. So then 6,90,000 into 1,335 divided by 1,940, that will be 4,74,820 will be the ITC reversed. So remaining is the net eligible ITC. Net eligible ITC for set off. The net eligible ITC for set off 7,53,000 minus 4,74,820. That will be 2,78,180. So that is the net eligible ITC. So now for this net eligible ITC, what we need to do? We will take first FCM liability, RCM liability, gross. What is the gross FCM liability? Gross FCM liability 3,18,000. RCM liability. What is RCM liability? Legal services. Legal services provided to the Surana will be coming under RCM. 63,000 is our RCM liability. There is nothing else. Minus ITC. So 2,78,180 adjusted. So remaining will be the net liability. So 3,18,000 minus 2,78,180 will be 39,820 and 63,000. So 39,820 plus 63,000 will be 1,02,820. 1,02,820 will be the answer. Got it? So that is with respect to this question here. So mainly this question is on exempted supplies. 1,02,820. So if you prepare a table like this, so then it will be easy for us. To arrive at the answer. Okay.